Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday, 16th of October. I'm recording the video today, 8:15 p.m. Eastern Standard Time. I've taken, again, quite a lot of time today to go back over previous market movement back to 1974 for the Dow and the S&P. And as a result of what I've had a look at, I'm going to change my bull wave count today, which means that I consider at this point in time both the bull and the bear wave counts are about reasonably even in probability. I actually favour the bear wave count, but we should have clarity within a few weeks. We should have clarity within a month or so, because it's the structure which now is quite different. At the daily chart level, this is the bearish wave count, which expects we've had a trend change here at cycle degree. We have more than 3% of market value below the lower of these double aqua trend lines, which began back in 2011. That's traditional technical analysis confirmation that we've had a sizable trend change. So the trend change is either at cycle degree as per the bear wave count, or it's at primary degree as per the new bull wave count. Either way, we're in for quite a lot more downward movement. It's either going to be a swift market crash or it's going to be very choppy and overlapping. So far to the downside, we have 1, 2 and 3 does have a 1.618 Fibonacci ratio to 1. 4 is still probably incomplete, and I'm expecting at least one more day of a little bit more upward movement. It might find resistance at the lower edge of this maroon channel. Minor wave 4 may not move into minor wave 1 price territory above 1926.03. With the change to the bull wave count, we now have a clear price point which differentiates the two. If we see a new low below 1370.58, that would be confirmed that the market should be crashing. While price remains above this point, both wave counts will be valid, but they expect really different structures. If we're seeing a new trend down at cycle degree, then we should see a really nice, strong, clear 5 down unfolding over the next few weeks at intermediate degree. Let's have a look at this idea at the hourly chart level, where B or X at cycle degree could be up here. We have a 5, 3, 5 complete down here. The fourth wave looks like it's incomplete. This structure for minute wave B is really difficult to analyse on the 5-minute chart. That took a while. I think it actually subdivides best as a running contracting triangle, although it does look a little bit odd. If I've got that bit right, then it's over here, and at 1880, minute wave C will reach 0.382, the length of minute A. That'll take price ever so slightly above the 0.382 Fibonacci ratio and would complete a small correction for this fourth wave, and it would have some alternation with its counterpart second wave. They'd both be zigzags, but their B waves are very different, and the length of A and C within them would also be very different. It's important to apply that guideline of alternation, sometimes with flexibility. Once the fourth wave is over, I'll calculate a target down for the fifth wave. I'll be expecting it to be quite short because this first and this third wave both look like they're extended. So I'll expect a short fifth wave. At this stage, all I can say about the target for that is it's extremely likely to make a new low beyond the end of -3 to avoid a truncation, but I'm not expecting too much more downward movement below that point. And when the fifth wave is done, we'll be looking for a deep second wave correction, and then validation point will be right back up here. At the monthly chart level, this is now the bull wave count. Previously, and for a long time, I had within cycle 5, primary 1 and 2, this is the same, and I had this all move down 1 degree, and I was expecting we were having just the end of intermediate wave 1. And I had that because it hadn't breached the upper edge of a base channel drawn around primary waves 1 and 2. Today I've gone back over the charts to 1974 for both the S&P and the Dow, and in the prior movement up to the end of the cycle degree third wave here, I've looked at that first wave and third wave within it. Within the first wave, I noticed that its third wave did not break above a base channel contained around the prior first and second waves of the same degree. So when we draw a base channel here, as I had been previously around primary 1 and 2, this upward movement has not broken above the upper edge of that base channel. Now, most commonly, normally, third waves do that, but obviously sometimes they don't. This one does show an increase in upward momentum, so it has some third wave properties. It's shorter than 1.618, the length of the first wave, and it hasn't broken above a base channel. But it's all, for this wave count, for the bigger picture, it's all within a cycle degree fifth wave. When I looked back to 1974 and I looked at that cycle degree first wave there, I noticed that within a cycle degree first wave, its primary degree third wave did not break above the base channel. This is a cycle degree fifth wave for the bigger picture, and it could be that it might be behaving like its counterpart cycle degree first wave did. So we may not see the third wave break above the base channel. I am much happier labelling this as a completed third wave than I am labelling it as a first wave and looking for a really, really shallow second wave correction. So despite the problems of not breaking above the base channel, I think that this wave count is actually technically possible. The fourth wave can't move into first wave price territory, so it can't move below 1370.58, and it's most likely to end within the price territory of the fourth wave of one lesser degree, and if it gets down that low, it's likely to find support at the lower edge of this channel. Draw this channel using Elliott's first technique from the end of primary 1 on this candle here to the end of primary 3, the price high, place a parallel copy on the end of primary 2. Let's have a look at this on the weekly chart where the beginning of cycle wave 5 is this point here. We have 1, 2, 3, 4, 5, a first wave, a second wave zigzag, a third wave impulse. The subdivisions are absolutely perfect within it. Intermediate wave 3 is just 0.76 of a point short of 2.618, the length of intermediate wave 1. So I'm confident that the third wave ends here and the fourth wave is really quick and shallow and it ends here. That gives us the price territory of the fourth wave of one lesser degree, and that's where primary 4 may end. The price labels on this weekly chart are important to show you how to draw the double aqua blue trend lines, and because the lower of those trend lines drawn using the approach outlined by McGee in that classic technical analysis of stock markets, because it's breached now by over 3% of market value, that's why I am confident in calling a sizable trend change. So the only question today is what degree we should label this downward movement and what structure is it going to be. For the bear wave count, we're calling for a huge market crash. For the bull wave count, we're calling for a primary degree fourth wave correction. Primary 2 was a zigzag, so I'll be expecting primary 4 to show alternation in structure and to be a flat, combination or triangle as most likely. So let's look at that on the daily chart where the end of primary 3 is this point here. There's more than one way to label this, and that there's more than one degree of labelling to give it. Today I'm going to label it as a possibly complete intermediate degree zigzag. If primary 4 is going to unfold as a flat combination or triangle, then the first movement within it is most likely to be a three-wave structure, and here we have a complete zigzag. So if this is wave A within a flat or wave W within a multiple, then wave B should move price substantially higher from this point. It can even make a new price high beyond the start of A, as in an expanded flat or a running triangle or a combination. If we do see a new high above this point in the next few weeks, the bear wave count will be quite firmly invalidated, and this will probably be my only wave count. We do not have to see a 90% retracement of this because a triangle or combination has no minimum requirement for its B or X wave. If we see a new high in the next couple of days above 1926.03, that would be some confirmation for the bull wave count. At that stage, the only possible structure which could be unfolding downward for the bear wave count would be a leading diagonal, and they are somewhat unusual, so it would reduce in probability. Overall, for this idea, I expect really choppy, overlapping sideways movement. There are several different possible structures that primary 4 can take. Flexibility and probably changing wave counts while it unfolds will be essential because there is so much variation within fourth waves. All I can say at this stage about its end is it's likely to end within the fourth wave of one lesser degree, so below 1730 to above 1646 when it's finally done, and it can include a new all-time high as part of its movement. That's all for me today with your S&P analysis, and I hope that all our members are having an awesome day.